Hey everybody, welcome to today's show. Today we're going to talk about the tax reform and its effect on everybody, because we know everybody's heard so much on social media, TV, etc. about how they're getting lower refunds. Is that the truth or is that just a myth? We'll find out if you're worse or better off than 2017. I'm Karen. I'm a CPA, entrepreneur with big ideas, and I'm the mom.
I'm Cadie. I'm a payroll specialist, business owner, and detail-oriented person that makes things happen, and I'm the daughter. Welcome to Cheers to Business. This has been a big discussion with people as far as their tax returns and their refunds. Are they smaller?
In a lot of cases, what I'm seeing so far, and I've had this conversation probably about 300 times so far this year, and I am taking the time to explain because their refund may be down. But if you look at the whole picture, and I think that's what I wanted to stress today on the show, is that really step back and don't just take the check and run and then complain about it. You really need to look and compare and see, because what I'm seeing, in all honesty, is, I'm going to exaggerate just a small bit, but somebody can make $20,000 more than the year before and pay the same amount of taxes as they did before, but the refund is smaller. Now, that's hard to wrap your mind around. But what's happening, because when the tax reform came out and the payroll tax withholdings changed, it decreased how much was being pulled from people's checks. So you saw it all through the year. Okay.
And what that means is if you look at your check stub from 2017, just pick a random one and compare that to a check stub from 2018, you'll see that the taxes are less. Therefore, your net pay, your take-home pay, is higher. So you're getting more money throughout the year on each of those checks.
Right. You know, when I think about the government, I want to know how much did I have to pay them last year? Well, a lot of people just look to see it's either they owe or they're getting a refund, not how smartly they pay tax. And I think it's just human nature. It's all growing up. I got a refund. Yay. They suck. And, you know, that's just become the norm of everything. But if you really look, and what I was talking about a second ago is income up, tax the same, withholdings less, refunds less. And that's what I'm seeing over and over and over.
And doing people's tax returns.
Yes. Yes, I've had more business related so far than individuals, but they're really starting to come in now. But it's on everybody. Something I want to circle back to is for everybody out there with small businesses to make sure that you're taking advantage of the 20% business deduction. And that's code section 199A, if anybody really cares, which I doubt they do.
Touch on that a bit more.
Okay. Rental houses count, small businesses. If it's a flow-through, and I mean an S-Corp, LLC, any kind of business like that, then you can get a 20% of your bottom line of your business as a deduction on your individual return. Now, there's a couple different areas with that, and it gets a little complicated. But as long as your income is $315,000 or less, you're going to get 20% off the bottom line. And that's been a huge factor for people.
Sweet.
I know. You got it on yours.
Woohoo.
Did you know you got it on yours?
That's what you're for. Just handle it.
I got your back. Just hit them up, Payroll. So you're seeing that a lot, too. I mean, are people asking about their withholdings?
We see it on, yes, because my refund wasn't as big this year. I mean, we hear that a lot.
Now, Cadie, why did you not withhold more on their paychecks?
Exactly, and it's not up to me. It's based on your withholding. So that's why it's important to, be mindful. Look at your check stubs. What are your withholding selections? Are you single and zero and you got married? Did you have a kid? And those withholdings matter. And if you're unsure of what to put, that's where an accountant comes into play. Whoever does your tax return, use them. Figure out what your withholdings should be, because the more accurate they are throughout the year, the better you're going to be come tax time.
I tell you what, and people need to talk to their tax person, I think, more and have that conversation. You know what? There are some great firms in Mobile. Wilkins Miller, Hartman Blackman, Teresa Frankel, Deborah Hodges. There's so many great CPAs in this town. We're really blessed in that area. And have the conversation, but it's hard for them to have that conversation. What's today's date? March 18th?
March 18th.
Yeah, it's hard to have that conversation on March 18th.
So when should people be talking to their accountant?
Mid-year.
October?
Well, not even that late. I say June, July, August. We're slowed down. We have time for a conversation, but look at it year to date. Am I on target where do you think I'll be? We can project pretty doggone close, because then you still have, if you get it early enough, you still have time to adjust it. If you know you're going to be $1,000 short, or if you're using the government as a savings account, which don't do that. But if you are, it's just a personal preference, then, go ahead and extra withhold. You know how much more you want paid in, divide it by how many paychecks you got left, and extra withhold that amount, and you'll be fine at the end of the year.
So I have a question. Is there such thing as too big of a refund?
Some people like them. It's such a personality thing. I have people that he doesn't care how much he pays in it the whole year. He could pay $50,000 and he would not care as long as. But if I have him write a check at the end, I've messed up because I did not make sure he would not have to write a check at the end of the year.
I've heard before, what is it about I'm not the government's bank or something where they're paying him more than they have to?
Right. But don't let that be your vacation fund. Set up another bank account. Call your payroll provider. Hopefully they can do it like Payroll Vault can.
Your employer.
Your employer. Yeah, don't call the payroll company. I'll get in trouble. Pay yourself first. I heard that on Audible from the Wealthy Barber book. And it was so smart the way they summed it up. Pay yourself first. Don't let the government be your savings account. You're not earning anything on it. So get it in your bank account. Have $10. Have $15. If you're going to go to Starbucks once a week, have $6. Put over into a savings account and don't go to Starbucks. It's the same thing.
We all have choices in life, Karen.
Priorities.
Starbucks may be one of mine.
I did not mean to hurt your feelings there. We know you're a Starbucks lover or Yellow Hammer.
So what else is different this year with the tax reform?
A big major change is they took away the exemptions. You used to get like $4,000 a kid or one for you.
Pop them out.
Pop them out. That's going to hurt.
Anyways, sorry.
Yeah.
Exemptions.
Anyway, they have taken away exemptions, but for married filing joint, instead of the old standard deduction, everybody was trying to beat to itemize. Let me get my laundry detergent, I wash my uniforms, and let me get this and that. My work boots, my telephone's required. Well, you don't have to do all that now on the federal. They're going to give you, if you're married filing joint, $24,000 as a standard deduction. If you can beat that, you're either making a lot of money given to the church, or you owe a lot of debt on your house, or you have a really big house. So if all that's said and done, for most people, the $24,000 is actually helping them. Now, if somebody has a child and is not married, they can file head of household, and they're giving them $18,000. And single is just $12,000. And if you're over a certain age, and I can't remember the age right now, I think it's 26.6. They get an extra little push.
Good to know.
But there was one return I did, and the lady owed $1 to the state of Alabama. I went, oh, hell no, that ain't happening. So I called her up, and I went through a list, the same old stuff. I said, car tax, charitable. I was just naming stuff. I said, there's no sense on the federal, but anyway, she's getting $36 back.
So that brings up an important item is keeping up with your stuff that happens throughout the year.
Yeah. If you can use medical, somebody's really sick in your family, and I am sorry. I mean that deeply. If you've got that much medical and you're making an okay living, that if you can use medical, why? I'm sorry. We'll have to say a prayer for you because somebody's sick.
So for the medical deduction, what is the percentage?
For years and years, it was 7.5% of your adjusted gross income. And that's after, like, if you put in money in the IRA, you take your total, list a couple different things, student loan interest, and then that comes up with your adjusted gross income. And that number right there, medical, it was 7.5% for years. Then it went to 10% last year, the year before, and now it's back to 7.5%. So if you make $100,000, you got to have over $7,500 in medical bills. And that's why I said that about, I'm so sorry somebody's sick in your family. And so all these prescriptions, and, you do not have to send your actual prescription receipts to your CPA because, I can appreciate the different medications people are on, but I really don't need to know everything.
Now, does that include medical? Does that include dental?
I got Viagra one time.
Oh, God. Can we not?
I didn't need to know that about that man.
Dental, medical.
You're trying to get your thoughts back together.
Trying to. Keyword. Orthodontics?
Yes.
That counts?
Yes.
Okay.
But here's the thing. Don't do that. See if your employer has a flexible benefit plan. That way. Why are you looking at me like that?
Here it comes.
I happen to have a company that does flexible benefit administration, but it's smart. Think about it. Braces, LASIK surgery, your daycare, all that you can get pre-tax. Just saying.
Okay.
Check it out. www.flexiblebenefits.com.
You don't have to say www anymore.
Oh, I don't?
Just type in the website. So just flexiblebenefits.com.
Can you do over?
And rewind. All right.
At flexiblebenefits.com.
Okay.
How's that?
Getting back to it.
Okay. What was your question?
So you can use orthodontics towards that expense. But
anything doctor ordered. If the doctor orders you a hot tub, good luck. But I want to go back to that 20% business deduction. And the reason is because, a lot of insurance adjusters and realtors, S-Corp are great for them. It's so perfect to have a reasonable W-2 and have the money flow through to you with no self-employment tax. It's beautiful. It's a great tool. But if you are making a lot of money, that's going to be phased out over time. Now, the limit's $315,000. A lot of people don't make $315,000, and I get that. But what the government also put on there is specified service people. And what that means, I am one. They directly called out lawyers, CPAs, doctors. Basically, if you're the only asset of that company, and if you drop dead and that company's going to go away, you are a specified service business. What that means is that you may not get that deduction if you're very successful.
Bummer.
Once you go over that $315,000 limit, you don't get the deduction. That's when it starts to phase out. I have seen somebody who's not a specified service business, and his deduction was $1.2 million. Now, doing the math, that's a 20% deduction. He's made he had a really good year. But I've also seen it be $5,500. And when somebody's in a 24% bracket, that's a huge deal to save 24% of your bottom line. Now, you don't get it on the state, of course, but you get it on the federal. That's another thing, too, we were talking about at the beginning of the show, talking about people's income up, their taxes down. That's because the bracket's reduced. The highest tax in this country was 39%. Now it's 37%. I am truly taking the time. If I have not returned your phone call, I am sorry, but I'm trying to take the time. People are confused about the new law on each and every single client to say, all right, this is what's happened. Because I know I'm going to hear that, why is my refund lower? So taking the time to say, okay, you made $20,000 more. You're paying the same amount of tax, but you had less withheld. But overall, on average, for an average tax return now, I'm seeing $1,100 to $1,200 tax savings overall for the whole year. But if you pay less in, you're going to get less now.
So what I'm hearing is people, while they're getting less refund, they're paying less tax overall throughout the year.
On average, yes. I'd say about 94%. I was saying 98%. Now I'm going about 94% of returns that I see that it is affecting them. Usually the people who it's affecting negatively, but not that much because their tax rate lowered, is somebody who's had a very good year, a successful year. And that's usually a W-2 successful person.
Congratulations.
To everybody out there who was.
Really what I feel like people need to look at is not necessarily, oh, here's my refund and that's it. They really need to look at the total taxes.
Or, oh my God, where is my refund?
Right, either of those. They really need to look at how much tax was paid in or not paid in for the whole year.
Absolutely. Did you pay more in making the same or more amount of money than you did in 2017?
I'm going to let you handle the taxes. I'm going to handle the rest of this wine from Domke Market on Schillinger Road.
I can read that when you're taking the only one that I can actually read. That's not nice.
There, take it.
I don't want it now. You take it.
What a brat. Come on, just read it.
It's called Head High.
Keep your head high and your taxes low.
Oh, I like that. That was perfect.
Go visit Domke Market for all your cheese and wine needs or clothing, jewelry. They have a little bit of everything. Thank you, Brooke. Cheers to lower taxes. Hip hip hooray. And wine. Is that your cheers?
Absolutely.
Yeah.
Y'all, thank you so much for listening and being here with us today. I'm Karen.
I'm Cadie. Please be sure to subscribe to Cheers to Business podcast on iTunes or anywhere else that you get your podcast. Visit our Facebook and be sure to give us a like. And if you have any questions or topics you'd like us to discuss, shoot us an email from the website cheerstobusiness.com.